I've made this link tree so it's easier for you guys to get into contact with me. If you want to find out more about the course, it's over on my Buy Me a Beer. If you want to simply get into contact with me, it's over on my crypto Twitter or my crypto Instagram. Welcome back to Lou Crypto, where we talk about cryptos every single weekday. Today we're looking at Quant on the weekly time frame, and we can see that after this week's weekly candle close, we've actually closed not only another confirmation above the 55, but actually reclaiming the 20 weekly moving average. Now, if we were to get rid of all of these moving averages, the 55, and we look at when price actually gets above the 20, we can see when we are above the 20 EMA, we do continue in an uptrend, and when we go below it, we continue in a downtrend. Now, we have been fighting over the last few months, up and down, but it looks like after this double bottom over here and the reclaim, we're just coming back, testing its support. Look at that loss over there of the 20. But after that spinning top, we've reclaimed it with this weekly close. Now I'm going to turn on the 55. It seems if we get rid of the 20, that we're just coming back to retest and confirm this newly formed uptrend with this double bottom breakout. Now we're setting up with a potential bull flag on the weekly time frame. So turning these drawings back on, we can see on the weekly time frame, we have held this key area of support for the continuation onwards and upwards. Now we'll zoom in on the daily time frame. We were talking about a certain key level being this double bottom neckline over here, as well as the head and shoulders or M pattern or descending triangle pattern down here. We had a target to 106. And when we met my target exactly, I was calling for a reversal, because this is what happens when you meet a pattern's target. We tend to reverse, and we've reversed and met the previous support now as resistance. What I can say is when we were looking for targets to the downside, we were waiting for this wick to be lost, as well as the neckline of the pattern. So there's two separate targets. The neckline, drawing from the top to the neckline, and we put that on the breakdown. Boom, target 106, but also using fibs from the top, from the low over here to the top. And it's saying if we lose 126, we're going down, but this pattern's target to 106 was already valid at 131. So there was two validation points, losing the complete wick low or the bodies over here, giving you two separate targets. So the Fibonacci's were saying once you lose 126, we got the 1618. If you lose that, you got these targets where you can bounce at any of them. But if we ever were to reclaim the 1 fib level, we need to now go ahead and break 134 to 136. That's why we've already tested it after reclaiming the 126. 1 fib level, we tested that area exactly. So this is the area I need to see price pushing through. I need to see Quant above $136. And then we will get continuation upwards. Until then, we're still just running into this. It could be some sort of resistance, but if we zoom in exactly to today's candle, we can see price is currently $132. Now, please don't forget, we've got this larger descending resistance, this yellow trend line, but I'm more focused now at the reclaim of this neckline over here, which is $131. If we do get this close, that is above 131, it means we will try and attack this downtrending yellow line. And again, we want to get above $136 over here. So that would be us breaking above past both. If we can actually break through this, it would allow us to pump back towards $150 to $160. And this potentially is a massive bull flag over here, just for bullish continuation. So it looks bearish, but it's just a descending channel or a falling wedge, and these are bullish patterns. So after a large run up, we can't go up in a straight line. We've corrected to our target 106, we've met the target, and we've reversed. Now we're trying to break out, reclaim the double bottom neckline. What happened in the past when you went above, we go up. So if we ever reclaim that same level, 131, then the same movement should sort of happen. So if this was once an area, if we got above, it's bullish. Then the same again, if we get above it, then it's bullish. And in actual fact, this lines up very nicely because we're coming into the apex of this descending triangle, this larger one, this dead cat bounce scenario. So I've already explained how patterns target is met, and that's why we're reversing. Only where you ever do go down to these targets if your 100 is lost, and we're at 32% higher than that, so we're at 132. So you need to come back down and lose 100 to validate this larger pattern, but it doesn't need to, because we simply met a smaller patterns target over here, this smaller descending triangle down here, and with that we're coming up, Could be just coming up to test its resistance for another leg down. Please be prepared. We need to see bearish candlestick patterns. We need to see price keep failing to get above 131. But at the moment we're at $1 higher. Yes, I know, only $1, but simply this is what could actually push us to attack this yellow downtrending line for us to attack. And if we can push through, it's back to this bear market box, which again, I'd love to make this a bull market box. Although we're technically in a weekly bull market as of those moving averages, I do just want as a final confirmation for us to take out this high, which was this $150 level that I mentioned back in 2021. If you've been a subscriber since then, great. Let me know in the comment section below when you actually started joining this channel. So if you're new here, we were calling for sells over here, we called for buys over here, and we called for sells over here. So we've been pretty much calling almost all moves, move for move, and of course preparing for worst case or other scenarios, but taking the scenario that is actually given to us. I think, yeah, for me, that's how I've had my success in trading, preparing for both ways, so you can't get caught off guard, and you just take the way that it actually shows, rather than, oh yeah, I'm predicting it's only going up and it's only going up, and then when it goes down, there you go. So that's why let's just prepare for both, and if it shows us it's going up, we take the buys. If it shows us it's going down, we take the sells. Simple as that. Just like this one over here, no loss of this, meaning we're not going down. Only once you lose this 131 neckline, we are going down. You have to wait until then. If 131 is never lost, we would have never gone to 106, only because 131 was lost, and we prepared equally. The preparation was, this was the buy trade, so you would have been waiting for the break of this for this trade, or the loss of this for this trade, and you just wait. Simple as that, rather than say, oh, it's only going down and then it breaks up. There you go. So this is why we prepared for both. If you are enjoying today's video, if you found some value, please do like, subscribe and comment. That's going to be it from me today. We're just simply waiting for the daily candle closes. It's so laid back, but Bitcoin, check out today's Bitcoin update. We've seen that it's reclaimed some certain weekly moving averages, stating that it's now not confirmed, but done the first part in confirming the bull market. We need a second confirmation, and that's eventually forming a bullish cross and holding it as support. And that's all we need to see for Bitcoin. And if Bitcoin is technically bullish on the weekly time frame and we're not seeing the momentum flattening, then the same thing should be for Quant. We should expect some continuation upwards now, especially after such a strong weekly candle close. Not this one, but the week before, being such a bullish pattern over here, signaling I was down there, the bears were completely in control, and out of nowhere the bulls started stepping in before the end of the week. This for me is a great confirmation statement, and yeah, hope to go higher and higher. Thank you guys so much. Like, subscribe and comment. There's